Welcome to Trusted Sources Research View. We've just published the latest edition of our FX Scorecard. So this is taking stock of emerging market currencies as the dust begins to settle after the US elections. So clearly we've now got a much more challenging external environment in terms of a stronger dollar, higher treasury yields on the back of raised expectations for the US growth outlook and also inflation expectations. So in this report, we present our regular heat map presentation of our views. So here we take a number of economic and market variables and we combine those with our subjective opinions of the currencies and then present that as a heat map scorecard. But in this edition as well, we try to set out a framework to understand the likely impact on emerging market currencies of these more challenging external conditions. So we set out an organizing principle based upon the vulnerability of economies and currencies to broad categories of external risk. So financial tightening, commodity prices, and dependence of the economy on exports. I mean, clearly, a stronger dollar is going to put countries that have current account deficits under pressure. Commodity prices, whether impacted positively or negatively, are going to hit the currencies of commodity exporters. And many emerging market currencies are very dependent on exports generally. So if there were to be widespread raising of trade barriers, then those economies may also be hit. So that's our starting point, but there are some important exceptions. The most obvious ones being the Mexican peso and the Russian ruble. The peso clearly is going to remain highly vulnerable and dependent on the pronouncements of relating to US policy, and we're probably not going to get any real clarity on that until well into next year. But our sense is that the worst case scenarios are not yet priced in, so there could be more downside for the currency there. Conversely, for the ruble, we expect the Trump administration to take a more pragmatic approach to sanctions, and this should help to normalize the investment environment in Russia and be a significant benefit to the ruble. Domestic factors clearly in emerging markets are going to continue to be important despite this big change in the external environment, and we highlight both the Indian rupee and Brazilian real as currencies where domestic factors are probably going to take precedence over the external drivers for the most part. In India, the rupee was already under pressure as a result of expectations of easier monetary policy under Governor Patel. But this latest demonetization move is really going to undermine the currency further. I mean, it may work in terms of the narrow electoral boost to Modi's chances in the upcoming state elections, but there's going to be massive economic and political fallout. And the worst of that is that the fragile political arrangements that have been in place between the ruling BJP and its allies and the opposition that had successfully passed a number of very important structural reforms this year, that has all been pretty much destroyed. So that's going to be very negative for the currency. In Brazil, really, we have a very poor growth outlook that is going to weigh on the currency. And then the political situation, political risks are increasing. The corruption probes and the ongoing plea bargains there are really just going to undermine the legitimacy of the government. So you know, that's one political factor. The other political factor is the various fiscal crises that are taking place in several of the important states. And these really serve to undermine the challenges facing the federal government. So both of these factors will undermine the real. For other currencies, investors are going to favour countries where there is structural reform and where there is sound policy making. And on that front, we highlight the rand as well placed to appreciate in this current environment. Not only did it overshoot on the downside after the US elections, but also it's supported by very orthodox monetary policy and by an improving political environment where the elements of the ANC that are more business friendly are increasing in influence at the expense of President Zuma. Please see the link below to download the report.